Kevin Warsh, a potential new guardian of the Federal Reserve's keys. On January 30th, 2026, President Donald Trump nominated Kevin Warsh to succeed Jerome Powell as the chair of the Federal Reserve. This significant announcement has ignited considerable discussion regarding Warsh's extensive background, the potential ramifications for financial markets, and the broader economic landscape under his possible leadership. Kevin Warsh, born on April 13, 1970 in Albany, New York, brings a robust and diverse professional background spanning finance, law, and public policy. He is an alumnus of Stanford University, where he earned a Bachelor of Arts in Public Policy in 1992 and Harvard Law School, from which he received his Juris Doctor in 1995. Warsh commenced his career at Morgan Stanley, dedicating 7 years, 1995-2002, to mergers and acquisitions. His transition into public service began in 2002 when he served as Special Assistant to President George W. Bush for economic policy, concurrently acting as the Executive Secretary of the National Economic Council until 2006. A pivotal moment in his career came in 2006, when, at the age of 35, Warsh was appointed to the Federal Reserve Board of Governors. This made him the youngest individual to ever hold such a position. During his tenure, notably amidst the 2008 financial crisis, he played a crucial role. He served as the central bank's primary liaison to Wall Street and was a key representative for the Federal Reserve at G20 meetings, directly engaging with the unfolding economic turmoil. Following his resignation from the board in 2011, Warsh continued to contribute to economic discourse as a distinguished visiting fellow at the Hoover Institution and a lecturer at the Stanford Graduate School of Business. References: n.wikipedia.org, https://gn wikipedia.org, wiki kevinwarsh.utm, source OpenAI. Kevin Warsh's nomination aligns closely with President Trump's preference for a Federal Reserve chair who would support more accommodative monetary policies, specifically advocating for lower interest rates. Warsh has been an outspoken critic of the Fed's recent expansion into areas such as climate change and diversity, equity, and inclusion, DEI, arguing for a more concentrated focus on core mandates like inflation control and economic growth. His views suggest a potential significant shift in the Federal Reserve's strategic priorities. Should he be confirmed, this could profoundly influence future monetary policy decisions, potentially leading to adjustments in interest rates and quantitative easing strategies. Such changes, in turn, are expected to reverberate across financial markets. However, the nomination has also introduced an element of uncertainty among investors. Concerns have been raised regarding his decision-making during the 2008 financial crisis and his perspectives on integrating emerging technologies like artificial intelligence into the financial system. References: axios.com, https www.axios.com, issue 2026 0130, Kevin Warsh, Trump Fed AI, UTM source, OpenAI. The selection of Kevin Warsh for such a critical position presents both compelling advantages and notable disadvantages. Pros: experience in crisis management. Warsh's direct involvement during the 2008 financial crisis provides him with invaluable first-hand experience in navigating severe economic downturns and implementing monetary policy responses under extreme pressure. Alignment with administration. His economic philosophies, particularly regarding monetary policy and the Fed's focus, appear to align with President Trump's agenda. This alignment could potentially foster more coordinated policy efforts between the executive branch and the central bank. which some might view as beneficial for policy implementation. Cons: market concerns and uncertainty. Some investors express apprehension regarding Warsh's past decisions and his potential approach to complex and evolving financial technologies. This uncertainty could lead to market volatility as stakeholders try to predict the direction of future Fed policy. Confirmation challenges. The path to confirmation for Warsh may not be smooth. Senator Tom Tillis has indicated a likely opposition to Warsh's nomination until a federal investigation into the current chair, Jerome Powell, is resolved. Such opposition could complicate or significantly delay the confirmation process, adding another layer of uncertainty. References: theweek.com, https theweek.com, politics, Kevin Warsh, Jerome Powell, Fed replacement, UTM source, OpenAI. The announcement of Kevin Warsh's nomination has coincided with noticeable volatility in the precious metals market, suggesting a potential correlation. For instance, the SPDR gold shares, GLD, experienced a decline with its price recorded at $444.95, marking a substantial drop of 50.41, representing a 10.165% decrease from its previous close. Similarly, the iShares Silver Trust LV saw an even more pronounced decrease, with its price falling to 75.44, down 30.20, so 28.607% reduction from its last close. These significant movements in the metals market may reflect heightened investor uncertainty concerning the future direction of monetary policy under Warsh's potential leadership. Specifically, market participants could be reacting to potential shifts in interest rate policies and the Federal Reserve's commitment to inflation control, both of which directly influence the attractiveness of precious metals as investments. The potential appointment of Kevin Warsh has drawn diverse reactions from economic experts and market analysts. Economist Neil Dutta has openly criticized Warsh's selection, articulating concerns about the potential unpredictability of his leadership at the Federal Reserve. Moreover, segments of the market remain unsettled by Warsh's involvement during the 2008 financial crisis and his articulated views on the appropriate focus areas for the Federal Reserve.